Hey YouTube, this is Zach with Achilles Financial. Today I'm going to be talking about the S&P 500 and some of the large cap stocks that are or have been holding up the market as we see that the entire past year of gains has been erased. So last year at the same point in time we were trading around $420 a share, and at this point in time we are all the way back there. Some of the things that I would highlight are in the portfolio associated with SPY or the S&P 500. Because this is a market cap weighted indices, you can see that we had Apple, Microsoft, Amazon, and Tesla have all recently announced earnings, all of which were not stellar earnings. We saw declining growth, we saw large buyback plans, but overall we're seeing slow growth, and that was even emphasized today when GDP came out at a negative 1.4% as opposed to the expected positive of a 1% growth. This is a multi-trillion-dollar economy, and when we see that decline, we're going to see that impact across the board. As such, we've got a number of the companies, again, the top 10 holders. If you look at the year-to-date return, some of them are incredibly ugly. The question is, where are they going to go? My expectation is that if we're looking at some of these stocks, Amazon being one of them, Apple being one of them, I think that it would be possible for us to see them go back to prior levels not seen since before the pandemic. So if I'm looking at a 3-year scale for Apple, you can see that in 2020, the pre-pandemic, that would put them at $75 a share. The question is, do we think that a company like Apple is going to drop by nearly 50%? At this point in time, I don't think so, because they were able to grow so much. However, if you look at levels not seen since September of 2020, that puts them at $125 a share. Keep in mind that this company did have a split since this point in time, but $125 a share for Apple is still a significant decline from today's level. Also, it's representative of a stock that has by and large held up the market during this tumultuous time. So the question is this going to be a double bottom across the market, or are we going to continue to see things begin that slow, steady decline over the course of this calendar year? At this point in time, I'm not much of a net buyer of Apple or any of these other companies as a single stock. I do continue to purchase the S&P 500 via the Fidelity ETF. So I am buying the market. I am continuing to lobby into or buy into a lot of these indices through my 401k, which is happening on a bi-weekly basis. But for individual stocks, I've slowed my spending. And for some of these larger names, the ones that I'll be looking to potentially go into would be a company like Google, which is aggressively buying back their stock and continuing to post very strong earnings and solid growth, albeit not nearly as much as what we saw previously. But after the Amazon earnings today, we also looks like we're going to continue to see them continue to take away some of that market share from the Amazon cloud services. You can see after hours, Amazon is down to $2,636, or an 8.5%, nearly 9% drop. So there's a lot of moving parts. As such, I'm going to continue to watch the market, but wanted to provide a quick update and a high-level overview on why I could easily see these companies return to pre-2020 levels, which is not that far away. Thanks for watching. If you find this content helpful, please leave a like and subscribe.